What's happening? Wagwan. What's good, everybody? Welcome in. Welcome in. We let some more people come in before I get started. If you new here, hit the follow button. If not, y'all go ahead and share the live out. I'm glad y'all here tonight. I want to start the live off by asking y'all, how are y'all feeling about y'all portfolio right now? How are y'all feeling about y'all ports right now? I mean, really. Not the answer you're going to get somebody at work. I'm talking about I want the real answer. If the real answer is I'm stressed, anxious, or confused, or just scared, right? I need you to know that you are not alone. And most importantly, I need you to know that what you're feeling right now is exactly what the whole market wants you to feel. Okay, the market is designed to shake you out, you in particular. And tonight I'm going to show you exactly how that works and what to do about it, okay? Now, we are in a market condition called a market correction. Right, the S&P 500 and the NASDAQ have both pulled back significantly from their highs. And when that happens, especially for people who are newer to investing, the instinct is to do one thing, and that's sell. They want to get the fuck out, right? They want to stop the bleeding. So again, I'm here tonight to tell that, most of y'all, that's the wrong move. Not because the market can't go lower, it can, but because the way you thinking about it, it's costing you money before you even get to make a trade, right? So we're gonna start off tonight by talking about this market correction that we're dealing with, and what is a market correction and why it happens. What the data says about what comes after a market correction, historically speaking, not my opinion. What happens after a market correction? Okay, that's what we want to pay attention to, and then we're gonna talk about a few specific stocks on my watch list. Pretty much including some names in the AI space. Y'all know we've been talking about that heavy over the weekend. So yeah, I just want y'all to know exactly what you're looking at and why. Now after that, we're gonna go deep on options. So if y'all stay with me, stay tuned. In the middle of the show tonight, I'm gonna go over options on a deep level. I know a lot of y'all watching other people make money trading options, and you sitting here like, how the fuck is this happening, right? You in the right live stream. I'm here to help you. All I got you to do is to hit the follow button, tap the screen. While I'm yapping, I need y'all tapping because it's going to push the live stream out to a larger audience, and it helps me out with the algorithm. That's so when you tap the screen, it pushes my live stream out to the For You page, and I would strongly appreciate it if you guys did that for me while you're here tonight. All right, now, yeah, I just want to teach y'all. We're going to talk about options later on in the middle of the live stream. So we're going to close at the end of the show. I'm going to talk about what's happening this Friday. I don't know if y'all ever heard of a witching day, but we got the quadruple witching day happening this week. Okay, so you're going to know by Friday for sure what it is. But I'm going to tell you before. You're going to be very confused when you open your charts if you don't pay attention. If you don't know what a witching day is, you're going to be confused on Friday. So that's what tonight's show is. Let's get into it. I'm gonna share the live out to let me share the live out real quick so I can get all my regulars in here, some moderators in here too. Pardon me. Let me share this live out real quick. Repost. One second, y'all. Thank you for liking the live, Swan. Yeah, y'all share the live out to somebody who y'all know who might be interested in learning how to invest in the stock market, long term, short term, Share it to somebody who you know who wants to learn how to trade stock options or futures. You might know somebody that want to be a day trader or a swing trader. Share the live out real quick for me before I get started, because they come in after I get started. Nah, Freeway, this is ME. This is MESH6. This is the micro E-mini S&P 500. And it expires June 26th. Nah, this is futures, Rex. This is futures. Okay. Freeway, when you dealing with futures, it's just buy or sell. Yeah, it's just buy or sell. You either gonna press buy because you think it's going up, or you gonna press sell because you think it's going down. It's a lot. It's way more simple than options. Futures is easier than options because options, you got Greeks, you got different expiration dates, you got all this stuff that you got to take into account. But we want to talk about what is a market correction before I get into the options and shit, Freeway. I want to talk about what is a market correction. Why does it happen? All right, we're going to talk about that first. We're going to talk about that first. Let's go ahead and make this big screen. Hold on. Let's maximize that real quick. But then I don't see y'all comments. Oh, no. All right, hold on. Yeah, we can't do Weeble like that. They got to be minimized. There we go. I got to be able to see y'all. How can I tell how much one contract costs? VC. When you click, matter of fact, you go to the initial margin. You want to find out, you go to the initial margin information on that futures that you trading, and it'll tell you everything you need to know about it. Maybe you can add a widget. Let me see. Trade. We looking for futures. Market. Futures. Oh, we got that right here. You can see the minimum fluctuation, but I'm looking for the margin. I want to see the margin. You just look for the margin, VC. Okay, if you can find a margin, then that's how you find out how much it costs. All right. So let me get on with the show. Because people get distracted real fast. So what is a market correction? I don't want to get caught up in that. We're not gonna get caught up in that. But you look for the margin. You find the intraday margin. You find the initial. You find how much it costs to get into the trade by looking at the margin on futures. And it look a lot different than it do on my screen right now if you trading on your phone. So I've only ever looked on the phone. But yeah, this level right here, 7,000, we been going down since we went up there. So this is why I want to point this out. We want to point this out. Let me go down to a 4-hour time frame so you can really get a good view of this downtrend. There we go. All right. So what is a market correction? A market correction is when the overall market or a specific stock drops 10% or more from its recent high. Okay? So if it drops 10% or more from the recent high, that is a market correction. That's the official definition. But a 10% drop is, or more is just a correction. If it keeps going and it hits 20% or more, it becomes what is called a bear market. Right? Now, this is what I want y'all to understand. Corrections are not accidents. They are not random. It don't mean that the economy is collapsing or that your stocks is broken. Okay? Corrections are completely normal and a healthy part of how the market works. If y'all didn't know, they happen. They have always happened. Ooh, Scott. Yeah, and the market has recovered from every single one of these corrections in history. Do you understand? So when you see a market correction, if I told you every time the market did this, it went back, it recovered, what would that tell you? What would you do? What type of lucrative decision could you make from that information? I'll wait. All right. Invest. That's right, future fame. Thank you. Bullish. That's right. All right. So just keep that in mind when you see a market correction. That is not an accident. They have always happened. And the market has recovered from every single one of them in history. Now, let me give you some context so that this doesn't just feel like something I'm saying to make you feel better. Since 1950, okay, the S&P 500 has experienced a correction of 10% or more roughly once every 1 to 2 years on an average. Let me change the layout real quick. This ain't the layout I wanted. Hold on. We could use this real quick just so I can show you SPY. Let me get rid of this whole thing. We don't need it right now. All right. There we go. And hide all the drawings. Okay. Take the VP off. And the moving average. All right, now you can't see nothing but the price action. That's all I want you to see for right now. Now, let me give you some context. So since 1950, the S&P 500 has experienced a correction of 10% or more. Usually this happens once every 1 to 2 years on an average. So every year or two this happens. It is not unusual, right? Every year or two. It happened last year. Looking like it might happen again this year, but we went on quite a bit of a run before that, after that COVID stunt. But if we have anywhere of a correction like we did here, let's measure that real quick too before I continue. Where is it at? Data and price range. Data and price range from here to here. All right, so that's 7 bars, 48 days. All right, let me take that same amount and start from the top of where we falling from now. Yeah. So according to my calculations, don't be surprised if SPY fall down into the 500s, 570, 580. We're going to come back to this live stream recording in the future if that was to happen and say, well, then I'll be damned. You know what I'm saying? Anyways, usually this happens every year or two. So what is unusual is how it feels when you living through this shit. When you actually in the moment, it don't feel the same as looking back in hindsight, right? Let's just look back last year when the market fell from the 600s down into the 400s. Remember, in the middle of that shit, it was kind of hard to see that it was going that low. And actually, we kept expecting it to recover. And then February happened. We expected it to recover. March happened. And then April happened. It didn't even recover in March. It went lower. We had some pretty crazy fucking days, all right, last year. Now, let's just pay attention. This is not unusual. When you in the middle of it, it always feel like this time is different. This time is really bad, or this time it might not come back. But this is what the data shows. The average correction lasts about 4 months. And after the correction ends, the market historically goes on to make new all-time highs. Not sometimes, y'all. Not sometimes. Not usually. Almost every single time throughout modern market history, this has happened. So the question is never really, is the market going to recover? The question is, do I have the patience and the discipline to still be holding when it does? Answer my question, y'all. Talk to me now. Let me know. Let me know. Let me cook now. Put a W in the chat if that makes sense. For the people that just came in, I'm going to say it again. Since 1950, the S&P has experienced a correction of 10% or more, roughly once to every 1 to 2 years. And during the moment, it feel crazy. It feel like this time is different, like it might be worse or like it might not come back. But the data shows that the average correction lasts about 4 months. And after that correction ends, the market goes to make new all-time highs. Not sometimes. This historically happens every time. So, again, you don't want to be sitting here trying to think, when is it going to recover? You need to ask yourself, do you have the patience and the discipline to still be holding when it does? The buying power, too. Do you got the buying power to take advantage of this opportunity? And that is where most beginners lose. Not because they picked bad stocks, not because they had bad timing, but because they sold during this correction. They sold last year when the stock market crashed, and then they watched the recovery happen without them being involved in it. So, I want to make sure that I show you why corrections happen. Because once you understand the mechanics, they become a lot less scary. How long has it been since this correction? We just started, actually, to be honest with you, but because we was oscillating between 675 and 696 for about 3 to 4 months, and we just now broke below a key level. 675 was a key level. VC 675 was a key level. I know you really can't see shit on this chart, but there you have it. SPY could keep going. It got more room to grow. Let me put it in hindsight for you. Hold on. Yeah, man, I wouldn't be surprised if this shit went all the way back down. Let me fix this. Into the 500s. And I don't need these lines on here right now. I want to. They there for a reason. It's my 4-hour time frame. 30-minute. I'm tracking the price of SPY, as you can tell. Okay, it'll do a little pump, but more than likely, we about to keep going down. I see 650 by at least the end of this week, but we gonna see. We gonna see. It ain't guaranteed. Now, like I said, because they sold during the correction, the people that sold when the market be down, they don't get the experience when it goes back to all-time highs. And once you understand how this works, it won't be so scary in the middle of it, right? Now, there are basically 3 things that causes corrections, ladies and gentlemen. It's 3 things that can cause a market correction. And usually it's a combination of all 3 things happening at the same time. The first thing is, who could tell me what's one of the first things that causes a market correction? Let's see. Never, Inc. Not as long as we need it. I think if you wasn't already in oil, then you was tripping. If you wasn't already in energy, then you was tripping. Don't wait till some shit pop off, then you want to get in. You know what I'm saying? Get in when ain't nothing. Listen, it's a lot of shit right now, but instead of you paying attention to that shit, you looking at this shit, right? And then the next thing that's gonna pop off, it'll be like, let's say healthcare stocks pop off, but you ain't paying healthcare no attention right now. But as soon as a pandemic happen, you'll be like, is it too late to get in? You know, is it too late to get in? Nah, man, like pay attention to that shit when ain't nobody else paying attention to it. You feel me? I'm 18. I just started e-commerce and got a lot of money and don't have nothing to do with it. Yes, you do. You just said the right thing. You are looking to invest. You in the right live stream, so you know what to do with it. I don't have to tell you shit, Nate. You know what to do. I'm trying to invest and triple my money. You're not trying, you're going to. You got a lot of time in front of you. All right? All right. Inbox me, Nate. I got you. You hit the follow button. Don't leave the live without hitting the follow button. You don't want to miss another live stream. This is about the only place on TikTok you about to come and get this type of information. Everybody else is just show and tell. Now, again, I haven't seen one person tell me one of the first things that can cause a market correction. And y'all don't know? At least say I don't know. Let me know. Come on. What's going on? Name some things that can cause a market correction. Okay, people taking profit could cause a market correction. People taking profit could cause a market correction. The market goes up, right? It goes up, and now it's all the way up here, and people want their money. They just made this money. You think they finna leave it on the table? No. Let's say a stock has been running up for months. Let's say a stock been running up for months. This is SanDisk. First of all, let's be clear. I wanna wake y'all up real quick. We know AI is strong as fuck. We know AI is going places. So why didn't we think in 2025 of last year to get in SanDisk when it was $25 a share, $27 a share, $26 a share? Do you know that motherfucker went all the way up to $7.25 a share in less than a year? SanDisk is memory. We dealing with memory, space, chips, technology. But SanDisk in particular. Think about it, y'all. Come on now. Who saw this happen? Who saw this coming before it came? But I got a little off topic. I just want to talk about a correction. As you can see, it went up that high, and then so it got its way up to 690, and it had a correction happen. It went all the way back. Then this is within a week. It was within a week, it corrected. This is just people taking profit, though. It don't mean that these investors was wrong for getting in. This is people taking profit. Because look what happened after that correction. Right? It's on its way back to 725. It's on its way back to all-time highs again. Because it already had this correction. You got to understand. The first thing is profit taking. So let's say, I'm going to start over. Let's say a stock been running up for months. It's gone from 100. Right? Let's say this shit went from 100 to 200. Boom. You got a correction. Right? The people who bought it at 100 are sitting on 100% gain. At some point, those people are going to want to take some of that money off the table. Do y'all understand? Everybody put a W in the chat if you understand that part before I move on to the other aspects of what could cause a market correction. Chi-Chi, thank you. Congratulations to everybody who dropped a W because you actually learning. Congratulations. Now, like I said, at some point, my guy, you locked in. Always, Class X. Just came in, Lex. Okay, what's up? I'm glad to have you. Now, at some point, they gonna get that money. They sell. So when enough people do that at one time, y'all, the price started to come down. And when the price started to come down, guess what? That triggers other people to sell too. Because they scared of losing the money that they just made. And then that selling creates a snowball effect. Please repeat briefly. Okay. There are basically 3 things that could cause a market to pull back like this. This is called a market correction, right? It's three things that could cause a correction, and it's usually a combination of all of them happening at the same time. And we just talking about how the first thing is profit taking. Because let's say you get in at 100. Let's say a lot of people got in at 100 and it went all the way up to 200. They gonna take profit. They not finna. They sitting on over 100% gain. They want their money. You're not finna just hold that shit. And when that happens, when that brings the price down, that creates other people to press sell too, and then it snowballs. For those who've never seen snow, if you take a snowball, you put it in the ground, or put it in some more snow, and roll it around, the snowball just get bigger and bigger. It compounds. I know I met some people that never seen snow before. Made 70K today. What about you? Shadow Lizard Sniper. You funny. You could lose that 70K. Your ass could lose that 70K today too. Let me pin his comment. Shadow Lizard Sniper. And let me see. I got you. Hold on. Boom. There we go. Well, Shadow Lizard Sniper, I'll let you know at the end of the day when the stock market open, but we haven't traded futures today. I haven't opened up the futures tab until just earlier today when I was talking to y'all. But we'll get there. I'll actually enter into a trade before I get off the live stream. How about that? We might fuck around and make 70K on the live. Shadow Lizard Sniper. Now, like I was saying before I was rudely interrupted, when the price started to come down, that create everybody else to do it too. Now, the second thing that everybody should pay attention to that could cause a market correction is macro fear, right? Know the difference between the word micro and macro. Micro, zoomed in. Macro, zoomed out. Macro means the big picture, okay? So when you look at the big picture and everybody's scared, I'm talking about with the economy, interest rates, government policy, global events, and right now we got a real uncertainty in the market. For those who don't know, we got concerns about tariffs, we got trade policy, and not to mention the war, but also the interest rates where they could be going. When big institutional investors, right, the hedge funds, the pension funds, the whales, right? A whale is a massive money manager, okay? When they get nervous about the macro environment, they reduce their risk exposure. They sell stocks and they move into safer assets like bonds, or they just make sure that they cash heavy. Yeah, Riola, that's one of them too. So, yeah, they make sure that they cash heavy. And whenever a big institution sell or a whale sells, whenever somebody who's managing a lot of money, when they press sell, the market drop. Yeah, because these institutions are moving billions of dollars at a time. Do y'all understand what I'm saying? Then the third thing is valuation reset. This one is a little more technical, but stay with me. Every stock trades at a price. Goodness gracious, United States oil. What the fuck? Sheesh. Somebody says, what are you trading? Crash Go Brazy. We doing some analysis right now. This is not a live trade. I'm teaching them the market corrections and what causes a market correction, and what to do during a market correction. This is some shit you need to know if you're going to be in the markets, whether it's stock market, futures market, forex market. All three of them experience, even crypto, all of them experience market corrections. Okay. Now, valuation reset. Every stock trades at a price relative to its earnings. Basically, how much money the company actually makes. That ratio is called the PE ratio. Have y'all ever heard of PE ratio? That's what's up, Lex. I love people who soak it up. That's who I'm here for. I'm not pouring this shit into the ground for nothing. I'm growing. I'm trying to grow what I'm pouring my water into. You've never heard of it? Oversight? Well, all right, check this out. This ratio that I'm telling you about, like every stock trades at a price relative to its earnings, how much money the company actually make. That ratio is called the PE ratio, the price to earnings ratio. When the market has been running up for a long time, stocks can get expensive relative to their actual earnings. Okay. Investors start to say, all right, now this stock is priced for perfection. Everything has to go exactly right for this price to be justified. And when anything goes even slightly wrong, a disappointing earnings report, if they come out and say we didn't do too well this quarter, a weaker than expected economic number, right? The stock gets repriced lower to reflect reality. Like basically, this shit ain't worth as much as you thought it was worth. Okay, not with what they just told us. So everybody start pressing sell. The stock get repriced lower. You get a lot of analysts who will say some shit like this really supposed to be at $75. And that'll bring the price down. Okay. Yeah, they'll reprice it. So right now, all three of these things is happening at the same time. Ty. Yeah, Ty. All three of these things is happening at the same time. Yes. Matter of fact, I'm gonna make sure I pull up the S&P too. We want to look at SPY as well. The reason why SPY is gray is because I have my chart set up to show me the difference between the overnight session, after hours, after market, and during the market. So when you see the gray area, it is pre-market. When you see the dark area, it is during the trading day. Okay. So I got it separated so I can see which one is which. It's not complicated. Right now it's gray because we in the pre-market. It's gonna turn dark when we not. Let me get these lines off. All right, there we go. The SPY just is going downhill. So this is from February 25th all the way till now. That's what SPY doing. I'm gonna delete all the drawings. There we have it. As long as it's in this range, all right. As long as it continues to stay in this range, it's going down. Gold plus. Has anyone heard about AI trading for Forex or gold? Okay. Gold plus, you gotta go. How about that? Nobody PM Gold plus. If y'all don't want to be scammed, don't PM that person. I'm gonna block their account. Get them out of there. They looking for people to scam. That's a West Texas intermediate, right? Top 40. USO? Yes. Can you give me money? Somebody said. I don't know if they trolling or not. Anyways, back to the lesson, y'all. I gotta stop reading the comments. I try to do y'all a favor and read the comments so I don't ignore y'all. It be people like this who fuck it up for everybody else. But yeah, try to refrain from texting stupid shit. And any of my moderators, y'all get them out of here. Get some of these people out of here, please, because they holding up my class. You know what I'm saying? So if y'all see somebody say something crazy in here, y'all got the green light to put BTA. You feel me? Get them out of here. Fuck them up. Fuck them up. Put them up. Put them up. Now, where was we at? We was talking about them repricing it and how all three of this shit is happening right now. Okay. So the bigger picture fear that we got around tariffs and economic policy and evaluation reset in some of the high flying technology names, like that's what we seeing. That's what a correction looks like from the inside. And now y'all know what you actually looking at when you see one. So what should you actually do during a correction? Does anybody know? Made crazy money on SPY QQQ put options this past week. Yes, William. Yes. Yes, it was crazy money. As long as you did what you were supposed to and you got in at resistance and took it to support, hell, the opening range breakout strategy has never been this easy. How many of y'all made money on the orb strategy this year already? At a certain level, Lex, at a certain level, if you selling calls and selling, if you selling calls, cover calls eating right now. If y'all new here, hit the follow button. I appreciate everybody for being here, tapping the screen, and and hitting the follow button. Thank y'all. But again, I asked y'all a question. I'm serious. What do you do during a market correction? Somebody says sell. I tell you what do I do? I'm gonna give you a framework that you can use every time, not just right now. Okay, I call it. Somebody says I'm in the chart now, bro. Buy, wait, buy, sell, average down. Says future frame. I'm not mad at that answer. So every time y'all feel the urge to make a panic move during a market correction, ask yourself these 3 questions before you touch anything, right? You want to say, has anything changed about why I bought this stock? Right? Hey Genie, if nothing changes on the reason why you bought it, I'm not selling Webull just because it dropped down this low. Because the reason I bought it is still there. I like the company. I like the platform. I don't like I don't like where I initially got in at, but that's one of the questions why I asked myself that, right? So if you bought NVDA because you believe AI is going to be one of the biggest technological shifts of the next decade, has that changed? Has that changed? Do you not think that no more? Is AI suddenly not a thing? Is it not happening? Or did the stock just go down because people are taking profits and the macro environment is uncertain? Like I just told y'all, them type of things bring it down. But if the reason that you bought it is still valid, that correction don't change a damn thing. It don't change shit. It shouldn't, at least. It doesn't change your thesis. It shouldn't. It might just be some noise. It's all cap. Ladies and gentlemen, question 2. What is my time horizon? Do y'all know what a time horizon is? Somebody in the chat, tell me what's a time horizon. All right, I got you, MJ. Let me give you an example, MJ. Let's say you plan on being in a trade for 5 minutes. You don't plan on being in that trade longer than, matter of fact, let's say you don't plan on being in that trade longer than a day. You're going to get out of that trade the same day you get in. You shouldn't be, your time horizon is a day. So it's okay to look at like a 5-day range or, a 4-hour chart, 30-minute chart, maybe even a daily chart. But there's absolutely no reason for you to be looking at a 5-year chart on a monthly time frame if you're not going, your time horizon isn't that far out. Your time horizon, I like how freedom fighters put it, countdown to close profit. I like that. Your time horizon is how long you gonna be in this trade. How long do you plan to be invested? What is my time horizon? This is huge. And most beginners, they never think about this. But not y'all, not here at Ironworth Trading. We getting this shit together. If you need this money in 3 months, that is a completely different situation than if you don't need it for 3 years. Put a W in the chat if you understand what I'm saying. That's what time horizon is dealing with. What is my time horizon? If you need that money in 3 months, it's completely different than if you don't need it for 3 years. So short-term traders and long-term investors should respond to corrections completely different. Okay? I'm not going to tell y'all all to respond to it different when some of y'all are short-term traders and some of y'all are long-term investors. A long-term investor who sells during a correction is essentially locking in a loss and betting that they can get back in at the right time. which most people cannot do consistently, okay? A short-term trader has different rules. They know, I'm going to put it this way. Know which one you are before you make a move. Know your time horizon. The third thing I'm going to ask myself is, am I making a decision or am I reacting to emotion? It's a big difference. So a decision comes from analysis. A reaction comes from fear. And here's the honest truth. Most people who sell during corrections are not making decisions. They reacting. Yeah. Yeah, they reacting. They looking at a red number and they stomach hurt. they get the bubble guts. They get the bubble guts off a red candle, right? About to shit on themselves off a red candle. And they just want the pain to stop. And I understand that, but that reaction is exactly what shakes retail investors out before before the market gets to fully recover. Yeah, they kick you out. You thought it was going down. You got so scared. You started pressing. You selling great positions you will never get again. Oh yeah. Yeah, I don't want that to be you. I don't want that to be you. The people on the other side of you panicking, the people on the other side of your panic sale, they the ones who profit from the recovery. Now let's talk about some specific names. I don't want to just talk in concepts. I want to show you what I'm actually looking at right now. Everybody take time, if you haven't already, to hit the follow button. If you learned anything and you haven't hit the follow button yet, you doing yourself a disservice. Because there ain't too many places on TikTok that's not going to rot your fucking brain, okay? It's not what we're going to do here. So from a broad market perspective, the two indexes I want y'all to keep y'all eye on, of course, is S&P 500 and the NASDAQ, but you can't ignore oil. When oil goes up, the market goes down. When oil goes down, the market goes up. That's usually how it happens. It's not 100% like that, right? But more than likely, they kind of run like that towards each other. So because I see oil coming down like that, I expect a pump to 670. I wouldn't be surprised if we pump to 670. And then dump. Not all in one whop, but y'all see how the market go. It don't just go straight down. It's taking the stairs up, then the stairs down, then the stairs up, then the stairs down. Congratulations, imagination. Freedom fighters, thank you for that holy airball. Jay Crump, thank you for the roses. Land 331, I appreciate you for sending me the heart me. Let me see. Yeah, thank y'all for the gifts. And everybody that hit the follow button, thank you. I appreciate you and congratulations. Welcome to the Ironworth trading community. It's my duty to make sure that you become a better trader, a better investor. So if you coachable, we're gonna see to it. Let me pull up the NASDAQ too, though. We're gonna pull three charts on here now. We're gonna keep oil on the top, and we're gonna look at SPY on one side, and we're gonna look at the NASDAQ on the other. We'll just use QQQ. It's in a range. Put it on a daily chart. There we go. I'll put this on the daily chart too. Boom. And we'll put US oil on the daily chart too. And if you want all of them, no, I want to keep this on the 4 hour. If you want all of them to move on the same thing, you come up here and you sync the time. You see how it says change time intervals on all charts simultaneously? So I can change the time intervals on all of them at the same time instead of doing them individually. If you just come up there and click that box, you can do the same thing with indicators and the crosshair too. See? Now this crosshair move across all of them. So if I move one down, it moves across all of them. Now, anyways, back to what I was talking about. I'm going to sync the symbols. All right. So I want you to keep your eye on SPY and the NASDAQ. We're going to talk about these two real quick. I don't want to put, I don't want them to be synced, only the time. Okay. I'll be having to keep up with y'all at the same time, so. All right, so yeah, we trading below this level of support. We broke below it. We came back above it. We broke below it. We came back above it. There was some consolidation happening there for about a month, but for the most part, we trading below. So look, there we go. And I don't need this RSI on here, so let's take some of this shit off too. I don't need this RSI. It's just clogging up space. Order MACD. I just want y'all to see price action. So I'm taking the indicators off. We're not going to talk about RSI, MACD, none of that shit right now. Just pure price action. All right, cool. It just clutter up the chart. It's just there to create extra squiggly lines that got you trying to figure out what the fuck is it for. And it ain't nothing you should be paying attention to right now, no ways. All right. Like I was saying, watch these. We're going to watch the S&P 500. Oh, I got them both on QQQ. I got all three of them on QQQ. What the hell, Cedric? USO. SPY. All right, this oil at the top. This is the S&P 500 right here, and then this is QQQ. All right, cool. So the S&P 500 is a basket of 500 largest American companies. 500 are the largest American companies. The NASDAQ over here is more technology heavy. So it's an ETF too. It's a basket of stocks, but they're technology stocks. Okay, so we in a technology driven correction right now. Right? The NASDAQ typically drops harder than the S&P because it's more concentrated in the names that got the most expensive. Key levels matter over here. I pay attention to these key levels. I told y'all 605 was a key level. We pretty much came down. Well, that gap already been closed, but this is also a key level. 592. You see how the price traded here before. So we break below that. That's a key level as well. I'm paying attention to these levels because if the price break below these levels, it can go even lower. And how low can it go? How low was it before? 587, 589, 587. So I know 589 from 592 could happen, and then 587, 579 is a key level to pay attention to because we came from there. So you just back test. I just passed my eval in 2 hours. Congratulations, Cash. Congratulations. Now, trade in a live account. For all of y'all that keep coming in here saying y'all passed them evals and them prop firm accounts, trade in a live account. I believe in you. Do you believe in yourself? Now that you learned the strategy that it takes to trade futures and shit with your own money, because you basically was just paper trading. You paid the paper trade. Now it's time for you, and you can get paid for real now. You can stay over there on the prop firm, but I'm letting you know if you doing that in a prop firm, what's stopping you? And don't say capital. You can trade micros in a real account and cut the fuck up and turn up from $100 to 10 bands. I believe in you. I believe in you. As long as you got risk management and you making sure that you got the right risk to reward ratio, I believe in you. Now, again, like I said, the NASDAQ is technology stocks, and we want to pay attention to key levels. I want y'all to start thinking about support levels. Think about support levels heavy. Okay? Who's confused about what a support level is? Drop in the chat, say help. Say help. And then I want everybody else who's not confused to explain what a support level is in the chat right now. What is a support level? Pluggy said help. Okay, look. Let's make this simple. Let's make this simple. Matter of, yeah. One chart. Let's make it simple. It's not simple. All right, spy. Let's see. He asked me what is support, so let's talk about it real quick. Area where the price holds when the price has been tested multiple times and hasn't broken below. We got some smart people in the chat. All right, so not saying you ain't smart if you didn't know. You about to be smart because you paying attention. So listen, right here, you see how the price came up from this level? This is considered to be a floor. This is like a floor. Matter of fact, let's go back because Spot had a real easy level of support and resistance to track out. All right. Let's use this. Let me take all this shit off again. Delete all the drawings again. I'm going to pull out a horizontal line and we're going to mark the top. I'm going to pull out another line and we're going to mark support so I can show you something real quick. I think this is probably going to do. This will do. Yeah, this will do. All right. Extended hours off. This is perfect, actually. So do you see these white lines that I put on here? You still there? The person that asked me, everybody that was confused about support and resistance, are you in the chat? Not just Pluggy. Pluggy, you ain't the only one. I want to make sure everybody else that was confused about support and resistance is in the chat. I'm doing a roll call. Let me know y'all still here. Okay, oversight still here. Cool. So look, they already told you in the chat, this is where the price has been tested multiple times. It's also a level where buyers step in at. Okay. So look, every time the price got down to this level, all right, it came from here. It rose from here, went up, came down. It made a higher low, right? It was low right here. It came up, came down, but it didn't go as low as it did before. That is called a higher low. Then it went up, and it went up higher than it did before. That's called a higher high. So we have a higher low and a higher high right there. It came down and created a higher low again because it didn't go as low as it did before 2 times before. Then it went up again and went as higher than it did before 2 times, which is called a higher high and a higher low, which means it's an uptrend. Okay. Then the price came all the way back down eventually to support. It came back to this level that it came from over here, but it failed to break below that level, treating this level like an imaginary floor. The easiest way that I explain to people, I give them this kitty ass explanation, and you can look at support and resistance like taking a ball inside of a house. You remember them 25-cent rubber bouncy balls? Take that shit, bounce it really hard on the ground. It hit the ground, hit the ceiling, hit the ground, hit the ceiling, hit the ground, hit the ceiling. You understand? That ground and that ceiling is support and resistance. This is the ball. This is the price is the ball, and the ceiling is resistance, and the floor is support. Okay? That is the easiest. It's a kitty explanation, but it does help you understand what you're looking for. Oh, you use all time frames. You can find support and resistance on any time frame. It don't matter what time frame you on. You start by looking for the highest price. You start by looking for the lowest price. You start by looking where the price came from. You want to mark key levels where the buyers and sellers was fighting at. Look at this. Look at how many times. Let's count how many times it came to this level and failed to break below it. So here we got December 18th. The price broke above this level. Okay, December 18th, it broke above that level. It came back to retest that level several times. It didn't break that level. It could have broke below it here when it went down, but the buyer stepped in at this level. Let's mark these levels too, so I can show you why key levels are important. I'm going to show you why key levels are important. I'm going to change the color of this one, though. We're going to change the color of this one. Let's say right here. Yeah, we're going to make it yellow. I want you to pay attention. The price came down to this level and it failed to go back to the white line. Okay, it finally went up, and it created. This was a new high for SPY at the time. We hadn't even reached. We was on our way to 700. So you got people that started buying $700 calls the moment it hit 696 back in January. Soon as they got smoked, because the price shot all the way back down to 686, came back up, came all the way back down to 676 eventually. Okay, created this big ass gap that ended up getting filled. But I don't want to lose you. I just want to show you how the price stopped here before, and looky here, it stopped here. It stopped here again. There's these levels is levels where the buyers and the sellers are going to have tug of war battles. Can you show me how to read SPY? Well, yeah, O. You got to come to a beginner masterclass. That's what you got to do. If I do that right now, it'll bore the shit out of everybody. Unless y'all all want me to go over that collectively, but it's different. But I don't want to turn this into kindergarten. I can though. I almost exited off the live on accident. But nah, check this out. I'm gonna do a cram course. You know what a cram course is? We're gonna make it super fast. If you see a green candlestick, that means that the price went up. Okay? If you see a red candlestick, that means that the price went down. Y'all with me? Stay with me. I'm gonna make it super simple since you say kindergarten. This is kindergarten. We're gonna talk about it real quick so I can go on with the rest of the show. Look. Let me show you what I mean. So look here. This is at 9:45. We on a 15-minute candle. We on a 15-minute chart. So each candlestick represents 15 minutes of time. Okay, what if I was on a 4-hour time frame? Each candlestick represents 4 hours of time. If I was on the daily chart, each candlestick represents one whole day. Look at the, I mean, I don't know if you can see. If you turn your phone sideways and make it like full screen mode, you should be able to zoom in if you ever have a problem seeing something, right? I know that shit can look like super small since I'm using a big screen. But yeah, check it out. So let's look at this candlestick right here. This is the 12th of March. Okay. It tells you that the price opened, because red candlesticks open at the top and they close at the bottom. Understand that green candlesticks open at the bottom and close at the top. Duh, because it went up, right? If it's going up, if a candlestick just started to appear right here, it starts out as a flat line. And what happens is it's growing like a snake. Y'all remember them snake firecrackers that you light and then it grows? That's pretty much how a candlestick opens. It opens flat, just like them snakes used to start out. And then when you light it, it grow. But what happens is if it grows up from where it opened, right? So this candlestick closed down here. Remember, red open at the top, closed at the bottom. If another one opened right next to this, lower than this one closed, it's going to be red. If it opens higher, it's going to be green. That's what determines whether it's red or green, if it went up or down. So we know it. We know that the price is going up if we see a green candlestick forming. But that green candlestick can turn red. We don't know until it's actually over with. So we're gonna go in. We're gonna look at a futures chart, since futures market is open right now, and I can show y'all in real time what a moving candlestick look like. I'm gonna show you in real time what a moving candlestick look like. We got to go down to a small time frame. And I got to zoom all the way in on this candle. So in 10 seconds, another candlestick is about to pop up on this screen. Okay. In 10 seconds, you're about to see another candlestick. In 3 seconds. 3, 2, 1, boom. Did you see this pop out? It's flat. Now let's watch it grow in real time. You see it's going down, but then it turned green because it's going up. But however far down it went, it created a wick. Now the wicks are telling you how low it went. See, it's going down, but if it go back up from here, it's going to show you a wick from how low it went. Y'all see how it came all the way down to there, and now it's going back up. So it's showing you the wick. It's showing you how high it went back up. So we know that this candlestick right here went as low as 671. or 6,719, and came all the way back up before it closed at 6,720. And then this candlestick opened at 6,720. We watched it go up just a little bit and then shoot straight down. Okay, it went from 6,720 to 6,718, and now it's going back up, and that's creating the bottom wick. The candlestick closes, another one opens, and it opens at the bottom, right? Because it's green, but if it goes down, it'll turn red too. It just lets you know. Also, I'm on a 1 minute time frame, so each candlestick only lasts 1 minute. After 1 minute go by, another candlestick gonna open. It's just, this is a graph. On the right hand side, this is the price. Okay, the price is on the right hand side. Right, I'm looking at the right hand side right here, so I know that the price was at 6,720 right here. On the bottom, you dealing with the dates. Okay, the bottom is the date. You see how the bottom give you the date and the time, and then the right side give you the price. Put a W in the chat if y'all learning. If you still confused, say I'm still confused. Look at all them people learning. Now, don't be embarrassed if you still confused, all right? That just means I need to help you on a 1v1 level, and that's okay. That's okay. Ain't nothing wrong with that. But if let's say that you standing on top of a building and you jump down off the building. This is easy math. You jumping down from the top down. You went down. You started from the top. Red candlesticks start at the top and they close at the bottom. It jumped down. Green candlesticks jump up. They start from the bottom. So you read a green candlestick from the bottom up. You know that, okay, this opened up right here. It closed up here. Then the red one happened and it went. It's just showing you that the price is going up and down in a certain direction. Like let's keep it simple. Let's keep it simple. The price went up and it went down. Went up, down, up, down, up, 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 down, consolidated. It's just showing you that the price is going up and down. It's not a straight line, okay? Let's not be confused about it. It's not a straight line. Let me get this off here. All right, let me get this off here. It looked like I was drawing coloring on the chart. When is the best time to place a read? Pre-market. Yeah, pre-market truly. Before you get moving candlesticks. Like, you know, during the market, cool. You can do this shit while the market is moving. Yes, you can. But if you can kind of like, you know, do some technical analysis and some chart analysis before the market even open, it would do you justice. And use top-down analysis too. That's basically where you start on a monthly time frame. Find the overall trend. Okay. Find the overall trend. Let's delete all of these damn drawings. All right. Now, the overall trend is looking like it's going up. However, we are in the middle of a correction because check it out. This purple line is the moving average. The price was above it since last summer. Okay. And we just now broke below that level, which means we are bearish. Okay. This means that it can continue to go down from here. So we are in a reversal right now. This is like walking up a hill, and then once you get to the top of the hill, you know, because there ain't no more hill to look up. You looking flat ahead or straight down. Now we at the top of the hill looking down. We're like, hey, I don't know if another hill finna come, but for right now, we getting ready to go downhill for a second. The momentum slowed down. You roll the ball up a hill and it slow down at the top of the hill before it starts to go down the hill. But when it first started going down the hill, y'all, don't it move a little slow after going up the hill? You ever roll the ball up a hill and then it go up to the top of the hill? It started to roll down the hill. Don't it pick up momentum? The more it go down, it picks up momentum. Momentum is a real thing in trading. It's a real thing when looking at the chart to find volume and to find momentum, right? Okay. But anyways, we went over support levels. Support levels are price levels where the market has historically found buyers and stopped dropping. So when the index approaches a key support level, that is where you start watching for signs of stabilization. That's when you start watching for signs of stabilization. This is an options chain. I ain't want to, I pulled this up. There we go. Any questions before I continue? Platform. This is Weebull. Did you see my question? No, I did not. Let me see. Tara, let me see what you asked me. What was your question? If you don't mind repeating it. How long would it take for someone to start making good money? You can make money from day one. Maybach, the question is, are you going to keep it? How long does it take for someone to learn not to lose money? It's the question, Maybach. I promise that's the question you want to ask. Because it really take people a long time before they learn how not to lose money. It ain't about making money. You really can't control how much money you're gonna make. But you can control how much you're gonna lose. You got to come into the market thinking about protecting your bag, not about how much money you're gonna make. More so, how do you protect what you came with? How do you make sure you protect what you came with? Don't be a gambler. Gamblers, you got people that walk into the casino and they don't give a fuck. They ready to leave. They ready to leave there without everything they came there with. They not coming in there with the mindset of, okay, I only want to lose a little bit at a time so that I can come in here again tomorrow. We not gamblers. I want to trade today and tomorrow. Jamaican Queen, you protect it by using stop losses and by making sure that you take your losses as small as possible. Even if you're not using a stop loss, right? If you manually using a stop loss, all you have to do is just make sure that you get the fuck out the trade when it's a small loss. But if you sitting there letting a 2% trade turn into a 2% loss turn into a 5% loss, and then you let the 5% loss turn into a 10% loss because you didn't want to accept it as a loss when it was only 2% down, okay? Then you ain't protecting shit. You giving them money. Because now you're looking at a 5% loss, letting it turn into a 10% loss because you didn't accept it as a loss. You watching a 10% loss turn into a 30% loss because you didn't take 10 as a loss. You know what I'm saying? You like, you know what? Just let me lose this little 100. It's all right. I came to the market today with the idea that I was going to either lose 100 or make 1,000. I like them odds. All right, now, if I lose 100, but I'm sitting there acting like, well, let me hold it because I don't really want to lose it. I don't want to lose this 100. Let me see if it'll go back to $50 of a loss instead of 100 or a break even. Next thing you know, you down $250 because you was trying to hold some shit. That's really, greed and fear. Now, when you win and fear can fuck you up too, Maybach. You can be up $1,000 on the trade, and I done seen people get greedy and hold it. I done seen people up $100 and they got scared because that they was gonna lose money because they done lost so many trades. They scared they gonna lose money. Now they getting out of a winning trade early. So you can get out of a winning trade early, or you can hold a winning trade too long, and it take the money from you, right? I mean, some of y'all be so caught up on trying to screenshot the shit and show it to somebody. I done been there. This guy name is I Need Some Money, and he trying to tell y'all what to do. Let me mute him real quick. I ain't gonna kick you out. I need some money because you need some money. So just pay attention. This is gonna be educational information for you. And as long as you got the power of execution, you're gonna get exactly what you need. Now, we pay attention to support levels, right? Because this is a price where the market historically found buyers every time it get down to this level. Okay, this bottom trend line is the level of support. When the index approaches a key support level, that is where you start watching for signs of stabilization. Now, for specific names in the AI space that are now worth having on y'all radar right now, of course, NVDA is going to be the most specific one. It's going to be the most obvious one, NVIDIA. All right, so I got resistance up at 198. That is the level where the seller stepped in and said this shit ain't gonna go no higher than this. You know, we're not gonna take it. Or people started taking profit. Down here, 171, this is the level where the buyer stepped in and was like, you know, hey, this is a good price for NVIDIA, so we want to buy. They said we want to buy. Let me see if I can get this red gap off here. What is this red gap? What is this red rectangle? All right, there we go. Now, I'm looking at these two levels because I know that NVIDIA NVIDIA can get $10 cheaper, or NVIDIA can go ahead and return to damn near $200 a share from here. It doesn't have to return to support because there are other key levels of support that you have to pay attention to. Watch 177. It could bounce from 177 like it did here. It could drop back down to 174 like it did here. These is all level, but it's making higher lows, so I wouldn't count on it. I'm also looking at the level up here where the price is consolidating here. It stopped here. It had a battle here. It had a battle here. So this is a key level. 185 is a key level. Yeah, 185 is a key level. Look at all the tug of war battling that's happening at that level. So now I got key levels drawn out. I'm paying attention to them. But this is the centerpiece of the entire AI infrastructure, NVIDIA. So there's going to be a GTC conference that's happening this week. If y'all didn't already know, we are going to go very deep on NVIDIA. We have to pay attention. Let's go to the news. They got a strong buy rating on NVIDIA right now. Y'all see? We don't want to watch the 5-layer cake. We just know right here this GTC event that's finna take place. Y'all see how you invested in a video and you ain't paying attention to this type of shit, or how you invested in AI and you not paying attention to this type of shit. Why are you not watching this type of shit? I'm serious though. Like you gotta know where we heading at in the next 10 years, because he gonna tell you. He always got on that dirty ass leather jacket. Don't he? But he always got on that leather jacket. There he go. There my boy go. There my boy go. All right. There we go. Yeah, y'all. Yeah. You gotta know what it is. Buddy ass is worth paying attention to, okay? This GTC conference. We're gonna pay attention to this. Now, beyond the video, think about the picks and shovels of AI. Remember we talked about that? Yeah, some of y'all are new here, so you haven't heard me talk about the picks and shovels. The company's building the infrastructure that AI runs on. During the gold rush, right, there was people digging for gold, getting rich as fuck. They were getting rich as hell digging for gold. They found gold, they was getting rich. That would make everybody else go get shovels and picks so that they can do it too. Okay? Then that's why they called it a gold rush, because everybody started to follow this trend where they would go and look for gold. The people who got rich first was not the people looking for gold. It was the people selling, it was the companies that was selling picks and shovels. Think of NVDA as the picks and shovels when it comes to this AI rush that we in right now. Somebody in the chat said they've been all in the video since 2023, turned 7K into $32,000. I would say they name, but it looks like F. It looks like Kuja H. GGVVBNKKIHFDSW. Name having ass. Why don't you make your name John Doe or something? You feel me? What was the purpose of that? And you coming, and you know what? For now on, if y'all got a crazy ass name like user 36942784547, I'm not gonna read y'all comments no more. I ain't, cause I want to say your name, but when it's that crazy shit like that, you give me Tourette's. You make me want to get the cursing. Now I'm gonna get back on topic, but y'all, congratulations though, and you are a smart person because you understand the power of execution. You believe in the video, right? You invested in them and you turned 7K into $32,000. Congratulations. And thank you for sharing that with the community so that they could see the type of shit that they could do too. If he can do it, y'all can do it too. Now, NVIDIA, I'm talking about the companies building the infrastructure that AI is running on. This includes semiconductor companies like AMD, Broadcom. It includes infrastructure companies like Microsoft, Amazon Web Services, AWS, right? Google Cloud. These are all companies that every AI application in the world runs through. And then there's a layer underneath that most people are not paying attention to yet. And that's why I'm going to bring it to y'all. Front door is called the optical interconnect companies. Optical interconnect companies. All you electricians know what I'm talking about. So the companies making the fiber optic technology that connects all these chips together inside data centers. We talked about this a week ago. I talked about it. I think I talked about it yesterday. But yeah, we talked about this a little earlier and we are going to come back to it. The point is, a correction in these names is not a reason for you to abandon the whole thesis. Just because NVIDIA having a little correction don't mean that you just sell all your shares and just say fuck NVIDIA altogether, right? No. So you got people with a longer time horizon. They know where this shit finna go in the next 5, 10 years, 15, 20, right? And a correction in fundamentally strong companies is historically one of the best buying opportunities your ass gonna get. It's like finding Ferragamo, Gucci, Louis, Fendi, Prada in the Goodwill store. The key word though is fundamentally strong. So not every stock that went up deserves to go back up, okay? Some of this shit gonna come down and it's gonna stay down. But the ones that got real revenue, real products, they got competitive advantages. Them is the ones that tend to, they usually go back. APLD, yeah, that's a good one. Somebody says, I think NVIDIA can hit 300 by 2028. So let's take a quick breather. So let me know what's up in the chat. Let me know what y'all think about NVIDIA before I continue. We got this conference popping off. Let me know what y'all think. Let some of this shit digest. Stuck between the $170-$200 range. When something is stuck at a certain price, I think that is a good thing because some of these people get paid on a weekly basis. So imagine if a price is at a good buying level for them at 1 week, but then it shoot up, it chases, it runs away from them, right? I'm gonna say run. It runs away from them so that they're not able to afford the shit. They gotta buy less now when they could have bought as much as they could while it was quote unquote stuck in a range. When something is quote unquote stuck in a range, it is a good opportunity. It's giving you time to buy before it go to $1,500 a share, before it go to $1,300 a share, like Netflix did. Yeah, Netflix went from like 130 to 1,300 in a matter of 2 to 3 years. Yes, it did. Don't believe me? Go look it up. All right, so this GTC conference that's happening in San Jose, in 7 hours. All right, this is NVIDIA's annual conference, their biggest event of the year. This is where they announce new technology. Jamaican Queen says it is the shovel, and the shovel is needed to dig. Right, you dig? That's right. You want the gold, you need the shovel. That's right. So they at this conference, they're gonna announce new technology, new products, new partnerships, and Jensen, right? He gonna give a keynote speech that the entire financial world is, and I'm saying this with grace, all right? Everybody waiting on this shit. Damn, I didn't know this was today. Yeah, everybody was waiting on this. So, cause you got to think about it this way. This is the largest company damn near in the world. Okay, and it's a part of the S&P 500. So whatever happens to it is gonna make or break SPY too. Yeah, I'm looking at 670 on SPY. My shit loaded. I'm loaded. I'm already loaded. Okay, I'm reloaded. Now, sorry about that, y'all. I ain't mean to scream in y'all ear. So he gonna give a speech. We waiting on this. But before I get into what y'all expecting him to say, I want to make sure everybody in this chat understand, overstand, and understand why NVIDIA has become the most important stock in the AI conversation. Right? Like my sister's gonna say period, but I'm gonna say exclamation mark. Because if you don't understand that, the conference news is just noise. It don't matter. Now, like Jamaican Queen said, it is the shovel, the picks and shovels. I know a lot of y'all already heard of that. Type in the chat if you already knew about the picks and shovels of the gold rush, but put a W in the chat if you just now learning it. Right? It's okay. Back in the 1800s, when gold was discovered in California, thousands of people flooded. They flooded in trying to find gold and get rich. Most of them didn't. Okay? Finding gold was hard as hell to do, uncertain and risky. Did you know who did get rich? The people who sold the shovels, the pickaxes. Because if I sell you a shovel and a pickaxe, I don't give a fuck if you find gold or not. I got mines, right? I'm selling boots, I'm selling tents, I'm selling food because everybody needed those things when they found gold, whether they found gold or not. NVIDIA is the picks and shovels of artificial intelligence. Okay, every company in the world right now is racing to build AI. Google, Microsoft, Amazon, Meta, Tesla, you name them. Any of these startups I'm talking about, it's startups you've never heard of. They all doing it. And to build AI, to actually train these models and run these systems, they all need one thing. Who can tell me what they all need? Yeah, they all need computing power. Computing power. Specifically, they need a type of chip called a GPU. Future Fame came through with the processing power, right? So they need a GPU. A GPU for y'all. I'm about to nerd the fuck out real quick, so bear with me, y'all. Don't run. Don't run. This is valuable information if you have the power of execution in you. A GPU is a graphics processing unit. Okay? Graphics processing unit. Processing unit, right? It was originally invented for video games. Ain't that crazy? This shit was originally invented for video games because games require thousands of small calculations all at the same time in order for them to be able to render the graphics. This shit turns out that training an AI model requires exactly the same thing. Massive amounts of parallel computation. They need a lot of computer shit happening at the same time. So NVIDIA, which has spent decades building the best GPUs in the world, they suddenly found themselves holding the key to the entire AI revolution. These people are like the gatekeepers of AI. So why this is a picks and shovels play? It doesn't matter which company wins, in my Stone Cold Steve Austin voice. It doesn't matter if ChatGPT beats Google's Gemini, or if some startup nobody ever heard of come out of nowhere. All of them need NVIDIA chips to operate. NVIDIA get paid regardless of who wins the AI race. That's incredible. That is an incredibly powerful position to have. And that is why NVIDIA went from a $300 billion company to a multi-trillion-dollar company in just a few fucking years. So, this conference that's about to happen for NVIDIA, and what this means for the stock, NVIDIA names their chip generations after famous scientists. Did y'all know that? Every time they come out with a new generation of microchips, they name it after a scientist. It almost make me wonder. I used to watch Futurama, and they had a little room full of all the scientists and presidents and all that shit inside. They had all their heads inside of a glass jar. A massive AI data center campus, Polaris Forge 2 in Harwood, North Dakota. APLD stock. In my city, I heard of APLD early and got in at $7. Yeah, that was some insider information. But I would like for you to hit the follow button so that you can let me know if something else go down in your neighborhood like that. You know what I'm saying? F is for friends who do things together. Okay? Now, NVIDIA named they chip generations after famous scientists. That's what's up. Join the Discord too. Hit the link in the bio. Come in the Discord. You feel me? Drop some of that shit in the chat. You can share it with the community. They'll love you over there. Now, especially if you got insider information and shit like that. See, it ain't insider information if I'm involved in it. As long as you cut me in. Now, right now, the chip that they are mass producing and shipping is called Blackwell. And Blackwell been selling faster than they can make the shit. Y'all know about supply and demand? Let's say y'all selling cookies and y'all selling these cookies for $1 a piece, but you got 1 million people that all of a sudden want your cookie now, right? So now that same cookie ain't worth $1 no more. It's worth more because you can't produce the shit faster than people want it. That's supply and demand 101. It makes it more expensive. But the moment don't nobody want your cookies, them shits got to come down to 50 cents a pop because you got thousands of cookies and only 2 people buying them from you. That is supply and demand 101. You understand? So right now, people buying the Blackwell faster than they can make it. Every major tech company in the world has been lining up to buy the Blackwell chips. That is what NVIDIA, that's been driving their money. That's where all their money been coming from. But the market is always looking forward. We don't give a fuck about what they selling today. They care about, and I care about, what's coming next? So at this conference, there are two things that we pretty much watching for closely. They gonna let us know about Ruben. There's been some rumors out about Ruben. Ruben is the next generation chip that's coming after Blackwell. Okay, so the question is, when does it go into mass production? I want to know if Jensen gonna get up on this stage and say Ruben is coming sooner than expected. I want to know if the mass production is being accelerated. That's gonna be a bullish signal. It means more revenue finna come in earlier than you already had priced in. Okay, new buyers come in, stock gonna go up. The second thing we watching for is Feynman, however the fuck you pronounce it. Again, this is the generation that's supposed to come after Ruben. Now, this is another scientist name. They named their chips after scientists, dead scientists, who I don't even think is dead. I think they cut these folks' heads off and got them sitting inside a damn jar. I'm just playing chat. I'm just playing TikTok. I'm just joking. This for entertainment purposes only. I'm just playing. Now, even though Feynman is further out, we still want to see what NVIDIA got to say about them. We want to know that they got a clear pipeline, a clear roadmap, because that's going to tell us whether NVIDIA's still got a competitive advantage, right? And it's not, and we want to know if that's not just about the product that they got today. We want to know what they got coming in the future. So we need to know if they have a sustained lead in the microchip technology for years to come. If Jensen shows pretty much a good roadmap for the next two chips that they about to come out with, that could build long-term confidence for shareholders of NVIDIA. Now, here's the most important thing I want to make sure that I leave y'all with as far as making a trade plan around a conference like this one, okay? Have y'all ever heard anybody tell y'all to buy the rumor, sell the news? Y'all ever heard somebody tell y'all to buy the rumor and sell the news? Let me know in the chat. Have you ever heard that saying before? Buy the rumor and sell the news. For sale, they just buy and never sell. Yeah, we got to buy the rumor and sell the news. For those that don't know what that means, if you don't know what it means, tell me. Say IDK in the chat if you don't know what buy the rumor and sell the news mean. I make y'all work for this shit because all I need is engagement. That's the only price of admission in the chat, is for you to engage with me. Talk to me. Ask me questions. And if you're new here, of course, I want you to hit the follow button so that I can see you again and help you again, right? Y'all keep me company too. I'll be up talking to myself if TikTok wasn't a thing. Yeah, I told my grandma I'm gonna go buy a rocking chair. Cause I rock in every chair I sit in. Now, I know that's irrelevant, but I be seeing her rocking when I'm looking at the charts and shit. Like, I don't know what I want to move, and the charts ain't moving fast enough for me. It might be anxiety. That might be what it is. I can't sit still for shit. It's 4 o'clock in the morning. I've been live about 2 hours already. Y'all night owls too. Some of y'all early birds. You know, the early bird gets the worm, but we rarely get sleep. But anyways, buy the rumor, sell the news. Here's what that means. When a big event is coming up, whenever you see a big event that's about to happen, a lot of investors start buying the stock in advance because they're excited about what they hope will be announced. Okay? They buying the anticipation, the rumor, the expectation. Then when the event actually happened, even if the news is good, okay, the stock sometimes drop because all the people who bought in anticipation, they satisfied. They got what they came for and they sell. Now the buyers are gone and the sellers show up. So when you watching the video this week, don't just react to the headlines. We got to ask ourselves, was this expected? Future Fame says, by anticipating a positive reaction. That can you reword that, Future Fame? Word that differently. But yeah, ask yourself, was this already priced in? Or is this a genuine surprise that's going to bring in new buyers who wasn't already positioned in it? But that type of question, that's what you want to ask. Is this expected or is it a surprise? That's a powerful question that you can ask yourself as a trader. Is this expected or is it a surprise? Now, again, because as important as NVIDIA is, you still need to understand the ecosystem around it, okay? The whole AI trade is not just one stock. It's not just NVIDIA. I want you to think about it in layers. Layer one is the chip makers. Wait a minute. Let me get him off the screen. Let me get him off the screen. All right, there we go. So it's not just the microchip makers. Microchip. Yeah, it ain't just NVIDIA. We got AMD. We got AMD. How often do you go live? Bernard Cooper, I try to do this every day. But yeah, I'd be lying to you if I said I go live every day. I don't. Matter of fact, hold on, let me delete all of them. I'm gonna stay in drawing mode because I can't take it. All right, we got the levels mapped out. There's a gap here. Yo, what is going on? Every time I go live, it's like Weeble will go to acting up. Like, do you know I'm live or something? What's going on? Don't embarrass me like this, Weeble. The fuck wrong with you? All right, so we got a gap right here from 171. I mean, damn, that's a big gap. Shit. Okay, let me mark that with a red rectangle if it let me. It's a big gap here. And I mean, it's being filled. Okay, fuck it. I'm just gonna make it. I'm gonna make it red. Y'all see the gap. We don't gotta be precise. So y'all don't have to keep hearing me click. All right. So, first time here, I love the way you break it down and explain things. Oh, thank you, Bernard Cooper. I appreciate that. I appreciate that, Bernard Cooper 64. TSM AVGO, which is Broadcom. TSM is Taiwan Semiconductors, and Micron Technology are other good companies. The ticker symbols for those are TSM, AVGO, and MU. Those are indeed other good companies that are that'll give you exposure to the AI trade, right? But again, we want to think in layers, okay? NVIDIA is the leader, sure, but AMD is the main competitor that's trying to take market share in AI chips. Like he said, Broadcom. Let's look at Broadcom too. It's one of my favorite ones. Let's tell them why Broadcom is also super important and can be looked at as a gatekeeper too. It's much needed. First time. Okay, yeah, I already read that one. Yeah, AMD is important. They make I want to see if somebody know before I tell y'all. Why is AMD why is AVGO important? Why is Broadcom important? Does anybody in the comment section know why Broadcom is a very important company to the whole AI boom? Oh, I mean, listen. Also, let me wake y'all the fuck up real quick. Some of y'all old enough to be. Some of y'all old enough and was here when cell phones first blew up. Y'all was here when the internet first blew up. Let me ask you a question. For everybody that's old enough to have invested in the internet and all of those internet companies and cell phone companies and shit, what the fuck was going through your mind back when the cell phones and the internet and all the technology and shit started booming back in the day? What was going through your mind then? What was you thinking then? Anybody in the chat old enough can tell us what was you thinking then, please. And if you did invest, then that means you filthy rich somewhere. Faye talking about some, yeah. All right, Faye. Okay. Just making sure. Was you there? I wasn't. I was there, but I wasn't there. But I'm asking y'all because if my parents had to get it, y'all got to get it too. I asked my mom and dad. They told me, they gave me they excuses slash explanation. I'm like, look, why I couldn't get this shit when it was 50 cents. I was 1 year old. I didn't know nothing about it. They like, shit, we ain't know nothing about it either. And that's how it is, you know. A lot of us didn't because we didn't know. And it's okay. But I'm bringing it up because you living in that same type of time right now, and you doing the same. Don't make the same mistake that everyone else made. Those cell phones were huge, like some refrigerators. Yeah, Faye. But nobody knew what was coming, huh? When the cell phones was huge, like refrigerators, nobody knew that we was going towards where we at now. But I mean, I can see clear as day where AI is going. We dealing with just the tip of the iceberg on where AI is going. I'm not going to turn this into one of those type of whistleblower ass live streams. I think I already have, but I mean, pay attention. It's all I'm saying is right now technology is going places again. This ain't the .com. This ain't the .com bubble. You feel me? This is real deal. All those companies that blew up during that .com, every company that came out with it, every website, www.com, looking at it, you know what I'm saying? Everybody was investing in it when they first hit the streets, but all of them didn't blow up. Some of them did. Some of them companies did blow up. Nonetheless, Broadcom is huge. They make custom AI chips for companies like Google, Intel, right? Intel trying to get back in the game. Broadcom don't make chips, but yeah, they make chips for companies like Google. Intel I'm not sure if they make them for Intel. I just know Intel looking to get back in the game. That's an old dog that you usually can't teach old dog new tricks, but Intel is an old dog and it's back in the game. So these are your semiconductor plays. Layer 2. I'm looking at the cloud providers because we all keep shit in the cloud, right? Big Sam says, so with the war going on, are we ready to look at technology again? I don't think we ever stop, Big Sam. I don't think we ever stop. And I think technology is a unicorn because it's one of those sectors that's leaking into other sectors now, right? Because every sector is using technology. Sorry, excuse me. Make it make sense. I've been talking for 2 hours straight. I need some water, y'all. So y'all gonna hear me clear my throat. I probably need to take a commercial break and go get some more water. But layer 2 is the cloud providers. We got Amazon Web Services, Microsoft Azure, Google Cloud. These are the 3 companies that most businesses use to actually access AI computing power. Okay, so they buy NVDA chips by the billions, and then they rent out that computing power to everybody else. You and I. Yeah, these companies are spending a brick ton, a historic amount of money on AI infrastructure right now. I'm talking about big bucks. Money, you see the number, you could barely say it. So that spending is called capital. expenditure or capex. When these companies announce big capex plays for AI, it is a bullish signal for the entire ecosystem. The third thing, my third layer, is the software and applications, right? Chat GPT, these open AIs and shit, Claude. These are companies building actual AI products that consumers and businesses use. Microsoft with Copilot, Google with Gemini. You got Salesforce with their AI tools, Meta with their AI features. So all these companies sit on top of the infrastructure, and they are the ones figuring out how to monetize AI directly. And then layer 4, this is the sneaky one that a lot of us don't pay attention to. The infrastructure underneath the infrastructure. I'm talking about the optical interconnect companies. I know that's a big word. Let me slow this shit down. I'm talking about the companies making the fiber optic cables that connect all these chips together inside data centers. I want you to think copper, think silver. Okay, but here's why this matters. As AI gets more powerful, the data centers running it need to move data between chips at speeds that copper wire simply can't handle no more. Okay, so the solution is fiber optics. They send in light pulses through glass instead of electrical signals through metal. This is supposed to be faster and more efficient, less heat, and there is a massive conference happening in LA this week called the Optical Communications Conference, where the industry is coming together around exactly this type of technology. And the smart money has been quietly moving into this space. And it's one of those situations where by the time it become obvious to everybody else, the easy money already gone. And this is an early signal, so pay attention to it. All right, I'm not going to tell you what to buy tonight. That's not what this stream is for. That's not what I do. But I am telling you that these 4 layers of the AI trade is worth understanding, overstanding deeply, because wherever you look in AI, the money flows through these layers, no matter how you want to put it. All right, now we done made it to y'all. Everybody that made it here deserved to be here. If you made it here this far, I want to make sure that I start this hour, or I ain't gonna say hour because I ain't finna be here another hour, but I'm gonna start this session by being real with you about something. A lot of y'all been watching people in trading communities. Y'all been watching people on, all these different sites, and then some of y'all in some discords already, whatever, social media, wherever. You see people posting these crazy ass gains from option trades, right? Like they showing you screenshots of them turning $500 into $5,000, and you thinking, how does this happen? And you trying to figure out if it's real. Let me pull up an options chain too. It's right here on the side. Make sure y'all can see this option chain. We about to break this shit down real quick. If you made it here, you made it. You deserve to be here. Let me check the screen real quick. How many of y'all gonna stay if I go get some water? If you still here by the time I get back, you really deserve to be here. I might go get some water. Okay. All right. Shout out to everybody that stayed. Fuck everybody that left. All right. So, how does that happen? Is it real? Yes. And if it's real, how do you guys learn to do that? How do you make so much money in options? How do you make money trading options? Tonight, I'm going to explain how this works. All of it. Real quick. So just pay attention. You might get to learn it real quick. All right. We're going to talk about what options are, how they work, how people make money with them, how people lose money with them, what's a real trade look like real quick. But I need y'all to promise me something. All right. I need y'all to promise me something. I need you to stay with me through the basics, even if you think you already know this shit, because I see people get into options thinking they understand it, and they missing one fundamental concept that end up costing them everything. So we starting from zero, and we're gonna go from there. All right. So the most basic question when it comes to options is, what is an option? A lot of y'all buy stocks already, and you just never traded options. An option is a contract. That's what these are over here. Let me close that. These dates right here, these are expiration dates. Okay. Start there. A contract. A contract is it's a contract between two people. The contract is going to give one person the right, but not the obligation, just the right. They got the right to do something. That means they don't have to. They have an option. Okay? They got the right, but not the obligation to buy or sell a stock at a specific price by a specific date. That by a specific date is right here. The expiration dates. 0 days away, 2 days away, 4 days away, 7 days away, etc. Right? All 2026. 2027, and even a couple of 2028 expiration dates. Here's the month and here's the date. This is the date. So let's look at Broadcom right here. It's at $322. Let's say for whatever reason you think Broadcom gonna go all the way back to $136. This is hypothetically speaking. I really don't think that. I'm just giving you an example. Let's say you think it's gonna go all the way back down to 136. So because you think the price is about to go down, you also need to say, when do you think it's going to go down by? Let's say you think it's going to go down by July. So I'm going to come here and I'm looking at the July contracts already because I think this is going to happen by July. And I have my price that I think is going to go to, right? I think it's going to go below $200. So I can even say a $200 put. Because I think it's going to go down, I'm looking at puts. I'm going to go here if my mouse stopped tweaking. And I'm going to go to puts. I'm going to buy a new mouse today. Today, I tell you. It's an Apple mouse too now. Yep, Apple, I'm telling on you. One of them touchscreen mouses. I want an old school mouse with a wire attached to that bit. Tired of this. Anyways, it's showing us both. It's okay. So we got puts on one side. And we got calls on the other side, right? Right here, we looking at, what did I say, July? Yeah, July. These are all the July contracts. We got puts on one side. Let me move y'all out the way because I know it's hard to see. So we got puts over here on the right side, and we got calls over here. Look at the price. In the middle, you got strike prices. Let me slow down. I know I'm moving a little fast. Right here in the middle, you got the share price. So we know that AVGO, which is Broadcom, is at $322 a share right now. And we said that we think it's going down. So all these prices are going down. Okay. Here is the $200 put that I was looking for. And remember, this side is pointing at all puts on the right side. So I'm going to slow down because I'm getting out of hand. I'm getting ahead of myself. I want to break this definition down word by word because every single part of it matters. So the right, but not the obligation. This is the most important part. When you buy an options contract, you don't have to do anything. You have the right to exercise it if it makes sense. And you can let it expire worthless if it don't. You're not locked in, but you have optionality. That's literally where the name options come from, okay? Now, a specific price. This is called a strike price. In the middle, we got the strike prices. This is going to look different on Robinhood. It's going to look different on Thinkorswim. It's just going to look different, okay? But nonetheless, you will know exactly what you're looking at when you see the strike. Really, a options chain should look the same no matter where you at. Yeah, it's going to pretty much look just like this. So it'll look different, but it'll look like this in the same sense. Same setup, different platform, might be different colors, and you can always edit it and mess with the parameters so it'll be different parameters and stuff. Oh, here we go. I only want to see puts. So now it's only showing me puts. Okay. Everything that is above 322, like 330, 340, 350, 360, all of these are called In the money when you buy in a put. Anything that it has already failed under when you buy in a put is in the money. Anything that it hasn't failed down to yet is out of the money. Okay? I'll explain to you the difference between in the money and out of the money in a hot second. A specific price though, we're going to talk about that. These are strike prices right here. It says strike. Every price that you're looking at right here are called strike prices. It is the price at which the contract allows you to buy or sell the stock. You lock that in when you buy the contract by a specific date. That's the expiration date. That's these dates right here. So you picking what date and what price I think it's finna go to. It's not complicated. Right now it's at 322. I think it's finna go to 136. So anywhere on the way there, I'm finna. If it does go where I said it's gonna go by the time I said it's gonna go there, I made money all the way from where I got in at. So I could even just say, hey, I think this gonna happen. Let's say I think this shit gonna happen by April. So June. And I can come here and I can get an at the money contract. The price is at 322. So I say, okay, as long as it stay under 330, I'm finna make a lot of money. If I get the 330 contract, I get the in the money contract. I don't gotta buy out of the money, but the further out of the money you go, the cheaper the contracts become. So that's why a lot of beginners like to buy out of the money, because it's cheaper. Yeah, they trying to be cheap. But it's safer to buy in the money. Now, you can make a lot of money buying out of the money contracts because you can buy more contracts. One contract equals 100 shares. 2 contracts, 200 shares. 10 contracts, 1,000 shares. So if you can afford to get 10 contracts, you holding 1,000 shares at one time. But anyways, this expiration date part, let's look at that real quick. All of these dates are expiration dates. Every options contract has an expiration date. After that date, the contract is gone. It's done. Either it was something or it wasn't. Either it went where you said or it didn't. So let me make this real for y'all with a simple example before we go any further. Imagine the video was only at $100 per share, and you think the video is gonna go up because Jensen finna say some shit, and you think he's going to say something that surprises the market to the upside. You could buy 100 shares of NVDA. You could buy 100 shares of it, at $100 each. That costs you $10,000. Or you could buy options. That's gonna give you the right to buy 100 shares of NVDA at $100 for the next 2 weeks for maybe $300. Let's use this example that's up on the screen. Let's go to let's use SPY. SPY is trading at $662 a share. Okay. Let's say you wanted to buy 1 share of SPY. It's going to cost you $662. But if you wanted to buy 100 shares of SPY, it would cost you $66,000. Or you can control 100 shares of SPY. Instead of spending 66 grand, you can spend 500 grand, 400. I said 500 grand. What the hell? Yeah, it's time to get off live. $500, right? Look at these. They 500. This one 480. It's 439. So you controlling 100 shares for a little amount of money. You controlling a lot of money. That's what makes options powerful. Or you can. So again, let's say I'm keeping it simple because the math, I need to make it simple. Let's pretend we got a stock and it costs $100 and you can get 100 shares of it. So that'll cost you $10,000 to get 100 shares of something that costs $100. Now, you could buy an options contract that's going to give you the right to buy 100 shares of that stock at $100 for the next 2-3 weeks, and it only costs you $300 instead of you spending 10 grand. If that stock go up to 120 from $100, your option that you bought is now very valuable because you got the right to buy something at $100 that's at $120. If a stock is at $1 and you say it's finna go to $5, on an option contract, right? And you say you buy the $3 call and it go to $5, you actually got the right to buy that stock at a cheaper price than where it's at. You don't have to. You could just keep the money that you made, because the premium that you paid for that to get in, for example, let's say y'all think SPY gonna go all the way back to $700. Come on, stop the cap. All right, let's say you think SPY gonna go back to 700. It don't even give me that option, so I need more strike prices. Here we go. Still ain't there. Let's say you're gonna go. Let's say you think it's gonna go all the way back to 687 today. They cheap as fuck. First of all, they cheap as fuck. That's for 0 days to expire. I don't even like looking at them. Let's just look at 1 day. So these are cheap too. You can get the 686 call for $10. Instead of spending $662, you can get it for $10 when you trade in stock options. But what's beautiful is when this goes up, that $10 that you spent for that one contract could be worth $400, $500 for one contract. Yes, I do, Tanvir Khan. You have to send me your name and your number and the best time to call you. I hope I said your name right. But yeah, so from there, you can close the trade, and the money that you invested that's worth this much now, you keep it. Or you can exercise the contract and buy that for a way cheaper price than where it then came up to. Okay? Your option will be very valuable at that point. So if it goes the opposite direction, your shit can expire worthless. You lose the money that you paid, but that's it. You don't lose $2,000, $3,000, $4,000, $5,000 unless you had that invested. That you don't lose that the way you would if you own the actual shares. Let's say you actually own the shares. Now you actually lost that money, right? So that right there is the fundamental power of options. You get leveraged exposure to the upside, but you're supposed to have a defined capped downside. You know how much you're going to lose if it go the wrong way. You can only lose what you paid for the contract, or if you smart, where you set your stop loss at. Now, that leverage is also what makes options dangerous if you don't know what you're doing. Because you can lose 100% of your whole investment very fast if the trade go against you. But if you understand the mechanics, you understand what I'm saying? That leverage is also what creates those big gains that y'all been seeing people post on the screenshots. You feel me? That's what them leverage is, what's helping them make that type of money. Now, there's two types of option contracts. You got calls and you got puts. Everything else is in the options world is built on top of a call or a put. You can buy calls and sell calls. You can buy puts or sell puts, or both of them. Now, everything else is built around that. So a call option is let's call it a bet, but I hate calling it a bet. But we're going to call it a bet to help y'all understand. A call option is a bet that the stock is going to go up. When you buy a call, you buying the right to purchase the stock at a strike price. If the stock goes up above the strike price that you picked before expiration, your call becomes valuable. If it doesn't, it expires worthless. No, you just lose the premium. This is not futures. In futures, you can lose if you keep that trade open. Or in a margin account, you can lose more than what you got. But in a cash account, you know what I'm saying? Like, nah, you good. You only gonna lose when you trade in options. You only gonna lose the premium paid. And when you buying an option or buying a call or buying a put, you can only lose that. Puts is kind of crazy, because the shit can go up forever though. But if I only had this much involved in it, yeah. So again, if it don't, it expires worthless. So think of a call like this. You calling the stock up, calling it higher, right? Calls equals bullish. I mean, it's going up. A bull attack you in an upwards motion. So that's why they call it bullish. It's going up. A put option is a bet that the stock is going down. When you buy a put, you buying the right to sell the stock at the strike price. If the stock drops below your strike price before expiration, your put becomes valuable. If it doesn't, it expires worthless. So think of a put like putting the stock down, putting it lower. Put equals bearish. A bear is going to swipe, is going to attack you in a downwards motion, going downwards. So here's something that surprises a lot of people. You can make money when the stocks go down. If you buy a put option on a stock and that stock drop, your put goes up in value. This is how traders make money during market corrections, like what we was talking about earlier. This is how professional traders hedge their portfolios. They own 100 shares of, let's say they own 100 shares of Nike. So they don't want Nike to go down, but if it do go down, they got to put on the side to make money for if it go down. That's called a hedge. It's basically, they buy puts as insurance. If they stocks go down, they puts go up, and it offsets some of the loss that they take. So now you got two weapons in your arsenal. Calls for when you think something going up, puts for when you think something going down, and both of them give you leveraged exposure with the defined maximum loss. Okay, that means I get to make money without having a lot of money, but I'm only gonna lose a certain amount if it go the wrong way. Whatever you pay for the contract. All right, so I'm gonna keep building because we need to cover a few more concepts before we can actually look at a real trade. Strike price and expiration. We're gonna stay on them two for a little bit longer because it's 4 a.m. God damn, I've been live for 2 whole hours, I think. 2 whole hours. All right, this is where it started to get draining, y'all. The strike price is, because I gotta explain this part before I get to the in the money, because that shit trip everybody up. So let me hurry up and try to breeze through this. The strike price is the target price that's built into your contract. If you buy a call with a strike price of $100, you saying, I want the right to buy this stock at $100, right? If the stock is at $90, your call has no current value, because why would you exercise the right to buy at $100 when you could just buy it at $90 in the regular market? But if the stock goes to 110, now your $100 call is valuable because you could buy at $100 and immediately have $10 per share of value on each share. Am I making sense, or is it still confusing? The expiration date is just the deadline. Like, your contract has a clock on it. If you buy a call option that expires in 2 weeks, you need the stock to make it move within those 2 weeks. That is what a lot of beginners miss. You can be right about the direction of a stock, but still lose money on the option because you was right too late. The clock ran out right before the move happened. That's called being right on the direction, but wrong on the timing. And options, timing is everything. Now, in the money versus out of the money. A call option is in the money when the stock price is above the strike price. Like our example. Okay, let's look at SPY. If we buy in a call, I mean, we think the price going up. And SPY is at 662. All these strike prices that is above the share price is out of the money. When the stock price is below the strike price, it's out of the money. When the strike price, okay, y'all listening? When the strike price is above the share price, it's in the money. Somebody said time decay, very important with options. That's right. So the option has no intrinsic value if the price has gotten away from it. Okay, let's put it this way. When you buy in a put, and I think the price going down some more, everything that it has not went down to would be considered out of the money. It ain't there yet. It needs to go there. Everything that it has already went under from is in the money. It has real value. It's already worth something. It has intrinsic value. So extrinsic value means it's not worth real money yet. It's worth time and possibility and opportunity, but it ain't worth real money. Thank you for the gifts, Red Mamba. All right, so the option has no intrinsic value right now. It's only valuable if the stock moves up past where you picked before expiration. Out of the money options are cheaper. They cost less premium, but they are riskier because the stock has further to go before it becomes valuable. This is why you see people buy cheap ass out of the money contracts, out of the money options on something that they think is going to make a big move. It can. It's a low cost, high risk, high reward bet. If the move happen them cheap contracts can multiply in value very fast, right? If the move doesn't happen, you lose everything you paid. I'm able to do what I'm able to do because I made a trade on Nike one day, y'all, and it shot up 900%. I bought out of the money contracts and it went up a lot. It went up a shit ton. And that's what got me my start in the game as far as teaching people. They asked me, how did I do it? I'm telling you now how it happened. That was a low cost, high risk, high reward bet. If the move happened, them cheap ass contracts won't be cheap no more. If it don't happen, you lose everything you paid. This is Webull. This app is Webull. So in the money options are more expensive because they already have real value built in. They move more predictably with the stock price. Okay, so I want to put all of this together with the real example. Let's go ahead and use NVDA. Let me go back to NVDA. Let's look at it when it was $100. Let's look at it when it was 100. I wonder why it's doing that though. Like, is the scanner not picking up? Do I got a crack in it or something? Like, what's going on with my mouse? All right. There we go. I want to see the video when it was $100 a share. For my example, let's make it simple. And it won't even let me like put nothing else on the chart, but it's okay. It's because I'm live. All right, here we go. Here's a good example. NVIDIA is $100 right here. What app is this, bro? Yeah, it's Webull. Webull. Now, we're going to use NVIDIA this week because it's literally one of the most talked about stocks on the planet right now. And there is a real catalyst, this conference that's happening. Let's say you did your homework, you watched my stream, you understand that NVIDIA is having its biggest conference of the year this week. We know the CEO speaking. You believe that there's a chance he gonna say something that's gonna surprise the market to the upside. Maybe he'll accelerate the Rubin chip. I don't know. Maybe he'll announce something nobody expected. But you think the stock could make a meaningful move this week. Now you got a decision to make. Okay? My process of how a trader thinks about this is the first question. What is my thesis? My thesis is that NVIDIA could move significantly higher this week based on positive information from this conference. That's a short-term, event-driven thesis. That matters because it tells me I probably want a short-term option. I know my time horizon. Something expiring maybe 2 weeks, maybe 3 weeks, maybe 1 week. If you ballsy, you can get 1 week. But not a long dated option. I don't need 3 months for this one. Okay, second question I need to ask. So I'm already going to go here. I'm going to look at the expiration dates. I'm like, I'm looking at the 2 week to expiration date. Maybe one. I can use the 11 day. These is cool. It's about where I want to be. And I can even say 9 day. All right, cool. Somebody says, I have 185 call based on GTC closing gap up, says Blake. Blake already on it. See, Blake said, I'm going to stay ready, so I ain't got to get ready. Now, what strike price makes sense? What strike price makes sense? How much can it go in one day? $5 to $7 in one day, Blake. So right now it's at 180. It can return to 185, right? The average. All right, let's see. Let's put the average. Let's put the EMAs on there. Put my EMAs back on there. What's going on? All right. So yeah, 184. You think it'll return to the back over to 200 EMA? 184. So Blake looking at the 184 call. Maybe the 180 call. I only want to see calls. We know that the price is at 180. Everything under 180, when you looking at calls, all this shit right here is in the money. These are all worth money right now because NVIDIA is over the price. We got everything above 180 is out of the money. Okay. 182 out of the money. 185 for cost reduction, says Blake. So we looking at the $350 for one contract. But yeah, the strike price 185 makes sense. If NVIDIA trading near its current price, I need to decide, do I want an in the money call that moves more predictably with the stock, or an out of the money call that costs less but requires a bigger move for it to become valuable? So for an event driven trade like this one, where I think it's going to be a big move, some traders go slightly out of the money so that they can get more leverage for less capital. Okay. Third question, how much am I willing to lose? How much am I willing to lose? Right? This is the most important question out of the whole damn trade. With options, you can lose 100% of what you put in. So you should never put in more than you are completely okay with losing entirely if you ain't going to use a stop loss. But this is not like buying a stock where it might go down 20% and recover. An option can go to zero. So make sure that you size accordingly. Okay. Now, fourth question. What is my exit? Before I even buy the option, I need to know, at what point do I take profit? Realistically speaking, I want to see if it'll go all the way back here, but whatever. You know, my entry gonna be, right now we at 180. I'm getting in at 181, and my stop loss gonna be right back here where it's at. That's just for me though. And as you can see here, I'm risking not even a whole 1% to make 3%, but that's a 1 to 3 risk to reward ratio. That's what I teach here at Ironworth Trading. That's what I'm letting y'all know. That's what it's gonna be. It's gonna be a 1 to 3. I'm gonna risk $1 to make $3. You understand me? Thank you, Blake. I appreciate it. So yeah, I would do something like that. You feel me? So I would make sure that before I even buy this shit, I need to know, at what point do I take profit? At what point do I cut the loss? And there's the point at which I cut the loss. Because there's some people that stay in this shit and they'll watch the video go all the way down and they'll just keep losing money instead of accepting the fact that they was wrong. Having that type of plan before you enter is the difference between trading and gambling. So if NVIDIA pops on a positive announcement, you got a decision. Do you hold, hoping for more upside? Do you take profit at a certain level and leave a horse in the race? A lot of experienced options traders take partial profits early. They got multiple take profit levels. They gonna get in. They gonna take off some money here, take off some money here, take off some money there. But a lot of people can't because they only buying one contract at a time, so they can only take profit one. They can only take profit one time. But some people they bought more than one contract, so they able to sell half. Once they money doubled, they selling half, and now they gonna let the other half ride. That way, you already made your money back that you put in, and you playing with the house money on the rest. Put a W in the chat if that makes sense. Put a W in the chat. We up at 5 o'clock learning. The market finna open in 4 hours. 5 hours. What are you talking about, TikTok? Leave me alone. Hopefully pre-market stays up, and I'm gonna be up for it. Says Red Mamba. Yeah, let's see what the futures market. Let's see what the market's looking like. Yeah, they up. They up. They up. They up. Dow Jones. Not much though. Not a shit ton. Not to where it's like crazy. Oh, you just inbox me, Lil P. Inbox me, Lil P. We'll get you together on a 1v1 basis. NQ Blake, I see it. Holy shit. Not by much. We still below that 200 moving average, so not by much. I'm not excited. I'm not excited. I'm still in love looking at it. No, for real though. I'm still bearish. I'm not surprised by this. This does not surprise me. I'm not bullish. This don't make me think that we going up on a Tuesday. Got your girl in the club and she choosing. All right, look, that's what a lot of people do. They make the mistake of buying one contract so that they can't leave a horse in a race. Now, back to options. I'll go back to options because I don't want to get off topic. So, your options start losing money fast. If the announcements that happen on the video disappoint or the stock don't move, your option can lose value real fast because of something called time decay. What the hell? Yeah, because of something called time decay. I need an option. Where's the options chain? Let me add a widget. All right, there we go. Anyways, I don't want to waste time sitting here clicking on this fucking screen. Why, as a rule of thumb, just buy 4 weeks out unless it's overpriced? Because of time decay. Time decay means every single day you hold an option, it loses a little bit of value just from the clock ticking. So you also need to know your stop loss. This is also why I say if it go the wrong way, I get the fuck out immediately because I accept the loss as a loss. And I don't got time. You don't got time to wait on it to go the right way. You're not thinking about time decay when you sit in a losing trade. It just fucked up your whole trade. It's better that you just get out and reposition. I don't know if anybody ever told you that, but you just learned it here. I don't care what nobody say. It's better if you just get out and reposition. If you take the loss small, I don't give a fuck what nobody say. They could trade how they want to trade. You could actually trade how you want to trade, right? None of this shit. You're not finna get anybody gonna whoop your ass except you for the results, right? So, time decay means every single day you hold an option, it's losing a little bit of value. Just it's the price of doing business. So you also need to know your stop loss. You need to know your stop loss. If the option loses 50% of its value, am I out? That's crazy work. But that's a personal risk management decision that you need to have. You need to have one. So this is what options trading actually looks like from the inside. It's not just buy a call and watch the money come in. You got to have a thesis, a strike, the risk, the exit every single time you enter a trade. Right? Y'all still confused? Later on today, I'm going to come back on and I'm going to go in depth on how to teach the option, how to read the options chain. Blake says time value is what value is left of its worth when it goes wrong way, and intrinsic value is gone. Yeah. Everybody that want to be here later on for that live stream, hit the follow button so you don't miss that class. But yeah, we want to get ready for the rest of the day. We're going to make today, Monday, March the 16th, twice as good as yesterday and half as good as tomorrow. I do believe that the algorithm knew that you needed my help, so it sent me to you like a magnet. Do you hear me? I came at the right time, and you know it. It's like a magnet, and I know it. That's how I'm able to say it. That's how magnets work. They attract, and if you chasing money, it's running from you. Okay, so we don't chase paper, we don't chase money. We attract wealth. It comes to us like magnets. We are attracting wealth in abundance. And y'all doing the due diligence, y'all doing the research, the studying. I appreciate everybody for being a part of the show. Y'all have been a wonderful audience. Wonderful audience. All right. And what I would like for y'all to do is to make sure that y'all keep y'all losses extremely small this week. That's all Coach Price got to say for the end of the day. Make sure your losses are small, and you do that by accepting the loss. Accept it as a loss if it's going the wrong way. Hey, get out. Don't let a 1% loss turn into a 5% loss. And then don't let a 5% loss turn into a 10% loss. Don't let a 10% loss turn into a 15, 20, 35 for 40. Do. Don't do it. Just don't fucking do it, okay? Get out at a small loss. It's okay. Take it up, take the loss, take the lick on the chin. You at least you're gonna be able to trade again. And if you make the loss small enough, you can get back in and reposition. Somebody says that's how you make a 30% success rate profitable. Yeah, Blake. That's right. That means you can take 10 losses in one day, and one win gonna wipe out all them losses if you do it right. All right, everybody put a W in the chat if you understand what I just said. If you overstand and understand what I just said, and you picking up what I'm laying down, drop a W in the chat for me. I should see a bunch of them. Cause y'all who I'm talking to, I was talking to you. Yes, you put the W in the chat for me to let me know you get the gist. If you don't get the gist, put an L in the chat to let me know that you need a lesson. That I should recap that lesson for you. Let me know. Other than that, I should see a bunch of W's. I should see some new followers because I want to make sure that I see y'all again. I should have some inboxes if for people who need my help this week, this month, this year, etc. Maybe you want to join the community. The link is in my bio. I got to do a call to action. The link is in my bio. If you want to join my community, okay, it could be your community too. Hit the link in the bio and come on in, make yourself at home. Or inbox me if you need personal help on a 1v1 level. I think it's 85 people in here. It's been about 3,400 people in here altogether. So I know about 84 people I didn't talk tonight, right? Maybe let's not be arrogant. Let's say I talked 40 people out of 80. If you guys need personalized help, because it was easy for me to teach y'all as a group, sometimes it's easier for you to learn 1v1. Inbox me if you feel as if you need 1v1 help still after everything I explained tonight. Okay. And if you're listening to this as a replay on YouTube, because I do post the replays on YouTube. If you ever miss a live stream, you can follow me on YouTube, subscribe to me there. The link is in my bio as well. But yeah, or just type in Ironworth Trading on YouTube. You'll find me there. I post all the replays there. So this has been a 2-hour and 30-minute live stream. You might have missed the first half. So go watch it. And again, inbox me if you need my help. Y'all literally don't be scared. I don't hit. Only thing we hit is profits. We hit target. We hit profit targets. You understand me? Maybe some stop losses and shit, but I ain't gonna hurt you. We don't hurt shit. I don't like hurting my account. I don't like taking losses. So what I do is I take the loss as soon as possible. Because if you have to take one, why does it have to be big? A trade should go one or four ways. It should either be a big win, a small win, a break even, or a small loss. A big loss is never an option. A big loss is not an option. The voice in my head said, "Can I get an amen?" But this ain't preaching. We ain't preaching. We teaching. You ain't got to say amen. I want you to know that the Most High did send me to you, but the Most High don't got shit to do with you not taking profit. It don't got, God ain't got shit to do with you not using a stop loss. You have the power. You was given the power to do great things, and you have to do great things with the power that was given to you. Otherwise, you wasting what was given to you, which is your ability to use your thinking. Like, use your brain. Do you want to give the market money today? Right? If y'all want to give the market money today, my Cash App is in my bio. You do not have to give it to the market. Okay? My Cash App is in my bio. I'm not playing with you. Instead of you giving the money to the market today, my Cash App is in the bio. Now, other than that, keep them losses tight. I ain't gonna play with y'all. I'm that coach that I done told y'all plenty times before. If I was your personal trainer and I caught you eating a honey bun, I'm smacking that shit out your hand. It's plain and simple as that. I better not catch you eating a rack of ribs. A whole rack? You trying to lose weight and you eating a whole rack of ribs and a whole loaf of... Listen, I'm just playing. It's easy to make a lot and lose a lot, but it's hard to lose a little. That's right. That's right, future fame. For some reason, is there a lot indexes to choose from or what? I'm about to start, coach. Yeah, there is. And when you say indexes, do you mean... Well, it don't matter what you mean. The answer is yes, there is. Yes. But you want to narrow that down. You want to come over here and use something called a screener. But that's another lesson for another day. I've actually talked about how to use screeners in the past. Okay? I got videos on YouTube where I covered how to use a stock screener to find an option screener. Somebody says it's like hundreds of what? Companies to choose from. Thousands. I was saying hundreds of ETFs. Or you might, it depends on what you trading. Right? Whether you trading currency pairs, Forex. What are you trading? Forex, futures, stock options. What you trading? We getting Arab money. We getting Arab money. Y'all remember that shit? So you can pick any of those. Yeah. These is options though. Don't get confused. You need a PC? No, you can trade from your phone. But it would be good if you had a PC. I mean, you want a computer, a laptop or a computer, hell, even a tablet. But I traded for about a year and a half on my cell phone. You can do it from your phone. I got tutorials on how to do it from your phone too. You don't need a PC. All right, y'all. I said I was gonna get up out of here, and I'm still here. So I'm gonna let y'all go. Let me get up out of here, because if I keep... I'll be here another hour if I don't. Platform resources are better and easier to use. Where we at? Yeah, y'all inbox me if you need my help. All right. Inbox me if y'all need my help. I teach people how to trade stock options and futures and be long-term or short-term investors by night. I mentor people by the day. But I also sell life insurance. So if you guys care about your family and your loved ones and you don't have a life insurance policy, inbox me your name and your number and the best time to call you so I can help you. Okay? That's what I'm here for. That's what I do. Also, if you haven't began investing yet and you want to get started, this is a sign. It's time. Don't let time pass you by. and you're going to have regret. You're going to look back and say, I wish I had a listened. Okay? Go watch Back to the Future and go watch all the Back to the Futures and look at how Marty McFly had to go back in time and tell himself, hey, stop doing this shit, and you might need to do this shit so that we can have this in the future. Griff, I think his name was Griff. He went back and told himself, look, you need to bet on this and bet on that. Well, this is your future self telling your present self right now, you need to motherfucking pay attention to what's going on in the markets, because especially with AI and technology, right? That's what I want to shine the light on for you. Future message from yourself in the future. Pay attention to AI and technology. Stop sleeping on that shit. All right? Y'all have a good night. Enjoy the rest of y'all day. I was serious about inboxing me. So do that right now before you lose me. Inbox me right now, your name and your number, and the best time to call you. Yes, I'm talking about you. All right? Good night. Good day. Whatever.